The US dollar is under pressure, and it's all because of a looming decision that could shake up the global economy. But here's where it gets controversial. Traders are betting big on a series of interest rate cuts by the Federal Reserve, starting as early as this week. This move, fueled by President Donald Trump's persistent calls for aggressive monetary easing, has sent shockwaves through currency markets. And this is the part most people miss. It's not just about one cut. Markets are anticipating a total of 67 basis points in reductions by the end of the year, potentially rising to 81 basis points by January. So what does this mean for the average investor? Let's break it down. In Tokyo on Tuesday, the dollar hovered near its lowest levels in months against major currencies like the euro and the Australian dollar. This weakness comes as investors are all but certain the Fed will slash rates by at least 25 basis points on Wednesday, with some even speculating a bolder 50 basis point cut. Here's the kicker. Trump took to social media on Monday to urge Fed Chair Jerome Powell to implement a bigger rate cut, specifically pointing to challenges in the housing market. Whether you agree with Trump's stance or not, his influence on monetary policy is undeniable, and it's sparking heated debates. The driving force behind these expectations, a rapidly softening labor market, which has pushed bond yields down and equity prices up, with Wall Street hitting new highs on Monday. Chris Weston, head of research at Pepperstone, puts it bluntly. There's a growing belief that the Fed is behind the curve and needs to act urgently to bring rates to neutral. This sentiment is gaining traction, with many now convinced the Fed will cut rates not just in September, but also in October, December, and possibly even January. Let's look at the numbers. The euro held steady at 1.1765 in early Asian trading, just shy of its highest point since late July. Sterling remained firm at 1.3605, while the Australian dollar stayed strong at 0.6672, levels not seen in nearly a year. Meanwhile, the US dollar was flat against the yen at 147.42. But here's the question that's dividing experts. Is the Fed moving fast enough, or are they risking falling further behind? Some argue that aggressive cuts are necessary to stimulate the economy, while others worry about the long-term consequences of such low rates. What do you think? Are these rate cuts a much-needed boost or a risky gamble? Let us know in the comments below. This is one debate you won't want to miss.